So a rotation zone, we named it that for a reason. And the reason is, and this is very, very important, it's a spot where markets tend to rotate into and then continue. If you think about what a rotation is, just the name of it, it's a turning, right? But it's not a pivot. By rotation, I mean, if I show you an area in a chart where a chart is going higher and then it dips down and rotates back up again, that's what we're looking for. Okay. And same thing on a short trade. Trade's moving lower, it rallies and then rotates back down. So the zone in which that rotation occurs can be a good opportunity to get in on a move that already started. All right. And what I always try to do is I'll use the edge of this trading card as an example. Okay. If I want to get in a short trade, I'm not looking to sell here. Let's say this is the old uptrend and this is the downtrend, right? I'm not looking to sell here. Okay. What I'm looking to do is take advantage of this kind of a move. So let's say it rallies up, it rallies down, rotates back up and rallies down, and falls down again. Okay, so rally, collapse, rotate back up and collapse again. I'm looking to sell here, not here. And the reason is because you can get a lot of head fakes, what we call head fakes, right? In basketball, a guy pops his head up and the guy jumps and then he pops up and the second one is where he shoots. I want that second one. Okay. And one of the things I always talk about with people, and I'll use a trading card again, a lot of people plan on getting a trade. They plan on selling here and buying here. Or if I switched it this way, they want to buy here and sell here. So buy low, sell high. Buy low, sell high is one of the biggest myths in trading. Okay. I've been doing this 30 years. I have bought the low and sold the high, or sold the high and bought the low 4 times. 4 times. Buying the low and selling the high is luck. What I'm trying to do is I'm trying to buy it here, okay, and sell it here. All right. I want to take a section of the move. I don't want to expect to take the whole move. And the reason is I want reliability. I want probabilities. And I want high probability trades. And it's much higher probability to buy here and sell here than it is to buy here and sell here. Okay, this is a lottery ticket. This is the odds are in your favor. And that's what I want to try and do when I trade. So that's what a rotation zone is. An area that the market may rotate into and then continue back in its original trend. Either way, up or down.
Thanks for that, Bob. My next question, how can traders effectively draw and interpret trend lines?
All right, so that brings me to sharing my screen.
Yeah, there we go. Yeah.
All right, so this is not a live chart. This is a screenshot. Okay, and if you were here last week, you remembered why I drew this box. Okay, you remember that this gray area is the pre-market, which I don't trade. And during the live session, we were basically working within this area here, okay? We had a rally, and then we had a move down here, and I said, okay, now we've got to close above this best fit trend line, so I'm going to go ahead and take a long trade. And this is what was happening during the trade, right? We got this candle higher, we got this little rotation down again, and then we had to stop because our 30 minutes were done. And then we rallied up, and you remember I had drawn this line, and here's where the high was, and went just through this line and then came back a little bit more. Now, it may have continued up, it may not have. I don't really care, because my trade was to buy this close above here, okay, and to ride it out until we got to my target here with a stop somewhere in here. Now, I didn't tell you guys the stop, because I didn't want you to take the trade. Because if I would have said, you need to take this trade right now, it would have gone down and made new lows and probably still would have been going down. Only because it's Murphy's Law. That's what happens, right? But if you guys were here last week, you remember this, and you remember that I had this red line drawn before the market got there, and that would have been a 5-minute trade that I got in, right? So now I want to go to my actual, can you see the Dutch Brothers chart?
Yep.
All right. I think you said yes. Kind of cut out on me a little bit.
Yeah, I can see.
Okay. I'm going to remove all of these lines now that I had on here. All right. Now what I have drawn in here is a rotation zone. It's the blue line and the gold line. Okay. The blue line is a 21-day, or I should word that, 21 period exponential moving average. And this one is an 8-period exponential moving average. Those two lines make up the foundations of the rotation zone. Okay, so you have to have those two. What's that, Badish?
The second one was the 8 EMA, right?
8 EMA
Right.
and the 21 EMA. Now, the reason I say period, very specifically period exponential moving averages, is because if you're trading on a daily, it should be a daily. If you're trading on an hourly, they should be hourly moving averages. If you're trading on a 5-minute, they should be 5-minute moving averages. They apply to the period you're looking at, okay? And they're always exponential. Why exponential? Because the exponential moving averages gives a greater weight to the recent price action than it does to the old price action. And that's important because you're getting into a trade based on recent price action, not based on past price action. You may be finding support and resistance based on past price action, but your signal is based on recent price action. Always. I don't care who you are. Even if you say, I buy when we come down to old support. Okay, that's still the recent price action touching old support, right? And that's what makes you buy it. So the rotation zone is dynamic. Well, what do I mean by that? Well, it moves with price, right? So you can see the rotation zone started to turn down here because the price was going down, and started to turn up here again because the price was going up, okay? Now, a lot of people say to me, well, it lags. I mean, if you just look at this, it didn't start turning down until the 6th straight session lower. That's correct. That's part of what I showed you guys on that trading card, where I don't care about selling here. All right. I don't want to buy here at 28.85, which was the low swing move, and sell here at this particular high. Okay. Which looks like it's about 38.41. That's not what I'm trying to do. I'm trying to buy here or here or here and sell here. Okay. I want this part of the move. Now, the rotation zone in this particular up move didn't give me any trades. Why? Because I don't trade the crosses. If you trade the crosses, you'll end up in a lot of trouble. Okay. You'll end up during times, and it's less visible on the daily chart because it happens less often. But if I go to, say, I don't know, a 5-minute chart, and I shrink this down, look at all these crosses over here. You got a cross up, cross down again, a cross up again, a cross down again, and the market really didn't go anywhere. See, I have no interest in that. My interest is in a trade that goes into the rotation zone after it's formed. So when a rotation zone is flat, like it is here, it technically isn't a rotation zone because it doesn't have any staying power, any holding power, where the market will return into it and then rally back up, or return into it and then sell off. All right. So what I'm looking when I'm looking for a rotation zone to be formed, I'm looking for a cross up or a cross down in the case of a short. And then I'm looking for them to angle up and widen out. Okay. And that happened here. So in this area, I now have an official rotation zone. So now if price goes into it, I'm going to draw a best fit trend line just like I did last week. Okay. Do this one here. And then when I get a close above it, which happened here, I'm going to take a long trade. And the next thing I'm going to do is look for my stop, which in this case probably would have been the close of this gap, would have been my stop somewhere below that level. By the way, when I'm looking for a stop and I find a level, I never put my stop on that level. I always put it slightly below or slightly above. By how much? It's really an art more than a science for me. Maybe I look for another area of support and I put it right around there or just below there. So in this particular case, maybe I look at this flat area here, which lines up with the gap. And I go, okay, I'm going to go sort of below the bottoms here and put my stop there. But that's just doing it really quick. That may not be exactly what I did in this particular case. All right. But anyway, back to the rotation zone. The market is moving towards that rotation zone and it enters the rotation zone. It has not closed below it. Okay. I draw a best fit trend line. I get a close above it here. I buy the open of the next day. All right. And then I wait. Now, it was possible here that the rotation zone would cross back down and stop me out. That's okay. It's a stopped out trade. It happens, right? But instead, what happens is we get an immediate shoot higher, and people always get excited about that. But then we get a rotation back down again into the rotation zone. Do I have a cross? Do I have a close below the rotation zone here? I do not. So I'm going to stick with my original stop. If I had a close below the rotation zone, okay, I might consider exiting that trade early, but it would probably have to be below these lows in order for it to happen. And then what do I see? I see a continued move higher to new highs. All right. Now, is this a perfectly designed trade that I just showed you? No, it's not. Honestly, the fact that the rotation zone was flattening out here, I don't really love this trade. So part of the reason I did not take this trade, okay, even though we got to new highs, doesn't matter. It didn't fit my particular way of looking at things, okay? So that's what a rotation zone is, and that's how I use it. And it can be used on a short trade as well. If you look here, for example, again, I'm using the same one. Here I had a cross down, okay? And here price action the rotation zone starts to get wider, and see it's this big here, and it's bigger here, and it's bigger here, and it's sloping. Now, what do I get here? Well, I get a movement up into the rotation zone right here. Okay, so I get my trend line tool. I draw a best fit trend line in this direction. Okay, and then I get a close below on the same candle that moved into it. So now I theoretically have a short trade, right? And I'm going to stop somewhere up here. What happens? We start to get a move sideways, and then we get an extended move lower. All right. Now, people say, well, where do you take profits? That's a whole nother 30-minute show. Okay. How I take profits off of rotation zone trades. But here you have a situation again where there's a cross, then there's another cross, then there's another cross. None of these are rotation zones. But this is a rotation zone here to the downside, okay? Because I got a cross, and then I got it widening and angling in a direction, okay? There was no entries into rotation zone, so there's no trades for me, okay? Here, we have a perfect one, okay? We get a cross, we get widening and angling, we get a move into the rotation zone. I prefer when it's multi-candle, not just one candle. You draw a best fit trend line right there. Here we get a close below, and we get a move lower, okay? Here I have two long ones, okay? Into the rotation zone here, I draw a best fit trend line. This is a hard one to draw because of this gap open here, but you can draw it off of this as well. I get a close above, and I get a move to what was the previous new high. All right. So you see these a lot of places. Cross lower here, move into the rotation zone, move down, move into the rotation zone, move down, move into the rotation zone, move down, into and down. Quick aside for the rotation zone. 3 moves into the rotation zone remain high probability. Once you get to 4 and 5, they weaken, and they weaken substantially. So I usually don't go past 3. All right. Now, I'll extend it in stocks in an uptrend. Okay. Because stocks have a natural upward bias. Okay. Shorts, I go maybe 2, sometimes 3, but rarely. Simply because at some point, the whole market wants to be long. Not just day traders, not just short-term traders. It's one of those things where if I put up a yearly chart of the S&P and the NASDAQ, it's going to look like straight up, right? Because stocks are the only market that have a natural upward bias. Okay, they do. Now, I'm going to change stocks to look at trend lines. So now I want to go to, what should we look at? Maybe Apple, since it's screaming higher. And let's go all the way to where it is now. All right, trend lines, okay? I think what we're going to do in the future is I'm going to do 3 to 4 sessions of trend lines and rotation zones and how exactly to trade them. Okay. But the reason I say they're going to make 3 or 4 sessions is it's going to have to be a series. Okay. And the first thing I would teach you guys when teaching trend lines is traditional trend lines. Okay. What do I mean by that? Well, for me, from this low to that low, that's a valid trend line for me. In traditional trend lines, it's not valid. Why? Because you only have 2 points, point A and point B. All right. They say, well, it has to have 3 points to be a valid trend line. So the traditional way of looking at trend lines, you'd have 1, let's say 2, and then possibly had this one rotated down, it would be a 3rd. Okay. Maybe if we move it here. Whoop, sorry. There you go. That's close to what a traditional trend line would look like. 0.1, 0.2, 0.3. Okay. That's not what I do. And the reason is because those 3 points shows you a trend that you can see with your eyes anyway. All right. I don't need this trend line here to tell you that Apple has been in an uptrend since about the 18th of April. Okay. Apple's been in an uptrend. I don't need a trend line for that. I can see it. I'm not stupid, and neither are you. Right? Apple's clearly in an uptrend. So what do I need a trend line for? I want trend lines to show me trades. Right? So I draw this one, and again, 2 is like 2 sessions later. Then I draw another one. I start at what I call the defining point of the first trend line, and I go 1, 2. That's another trend line. And then I draw another one. I have the initiating point and the defining point, and I'm going to start using those terms. And I start at the defining point of trend line 2, and I draw trend line number 3. Okay. And then I do this. I go to the defining point of number 3, and I draw trend line number 4. And I end up with something that looks very similar to a GAN fan. Okay. What is a GAN fan? Well, some platforms have GAN fan tools. I don't find them particularly useful. All right. But what I do find is you'll have GAN levels in between a lot of these trend lines that the market may respond to those. All right. Now, this is me looking or this is somebody else looking for support that they can buy off of. I'm not. I have the rotation zone for that. I'm looking for breaks that matter. Okay? That's what I'm looking for. So when I draw trend lines, I only need 2 points, and I just continue to draw them over and over and over again until I get a trend line that gives me a break, and then my next trend line is the target, or gives me a break, and then my next trend line is the target. And you'll see as time goes on, by drawing trend lines this way, that this trend line is probably going to line up with somewhere along these two highs before it breaks. And when it breaks, you'll have a trend line as well as convenient support that matches up with that trend line, and you'll have a high probability target. All right, so that's what I do with trend lines. Traditional trend line, you need 3 points to make it valid. I say you only need 2 because I don't need a trend line to show me the trend. I can see the trend with my own eyes. All right, so I'll have PowerPoint presentations for both of those, but they're going to have to be in like a 2-session or 3-session or a 4-session series of things to explain those properly. What we're looking for as traders is trades, okay? Not theater of the obvious. Okay, theater of the obvious is what analysts look at. Analysts will look at Apple and they'll go, well, we think Apple's in an uptrend, and we just moved our target higher because it moved higher today. That's what analysts do. You know, somebody looking at Apple prior to today's move, okay, might have said that their target for Apple was 225. And now that it's trading 223, they're going to come out with a note. Watch how many analysts do it. They're going to come out with a note that says our new target for Apple is 260. Well, gee, that was brave, right? That was really, really brave of you guys to give a new target when the thing is just rocketing up to new highs. As opposed to letting it hit their target and saying, hey, our target was reached, so now we're going to reassess, which is what we do as traders. Target was reached, okay? I'm going to go ahead and exit that trade, or I'm going to tighten my stop up, and then I'm going to do the next thing I'm supposed to do. Analysts don't have to worry about that. That's why analysts are useless to you guys. That's why most financial news, I'm actually going to be on Fox Business in about an hour and a half. All right. Even my analysis on Fox Business is going to be useless to you because you're looking for trades. Neil Cavuto is supposed to ask me if the market is overvalued. Yeah, it's overvalued, but so what? What does that mean to the trade you're going to take? It means nothing. Hey, the market's overvalued. I've got a perfect setup and it's telling me to go long, but it's overvalued. Okay, it was John Maynard Keynes that first said that the market can remain irrational longer than you can stay liquid. I'm not a Keynesian at all, but I still think that is about a perfect description for active investors as anything else. So anyway, that's what I want to cover today. If Badish can get it approved, we'll set up that 3 or 4 session thing on trend lines and on the rotation zone. It would start with trend lines and it would end with rotation zones after that. Now, if we do a series, I'm going to be talking. The reason I trade the way I trade, and you know, Badish, you always ask me if I have a final word of wisdom. Okay, I'm doing it without you asking me. Okay. In order to trade with a risk-focused approach, you have to have an approach. Okay, you first have to have an approach. And you want reliable trade entries. And that's what I believe I have. Okay? I believe I have a reliable system of entries. Okay, then prior to that, I want reliable stop discovery. So if I have an entry coming up, the first thing I'm going to do is look for my stop, not look for my target. And then the second thing I'm going to do is look for my target. So I'm going to be showing you guys with rotation zones and with trend lines what trades to avoid. And that is risk-based.